Welcome back to Investing Talk Podcast.
Today we're looking at IREN. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. We took the stack of sources you sent, and the overarching narrative is pretty clear. IREN, well, it's not just a Bitcoin mining company anymore that happens to have some data centers. They've really completed this strategic metamorphosis. They're an AI infrastructure utility now.
Right. That distinction is crucial, isn't it? It's not just like a side business anymore. It's the core focus. And that shift, it fundamentally changes how you value the company, doesn't it? It kind of moves them away from being purely tied to crypto volatility.
Exactly. Diversifies the revenue toward these high-growth cloud services. And when you look at the fundamentals, the impact of this pivot is just, well, undeniable. Fiscal 2025 revenue came in at $501.02 million.
Wow. That's a 168% jump year over year.
Yeah, 168%. That kind of triple-digit growth, it doesn't come from just tweaking things. It's driven by this massive demand for AI compute capacity that they now provide.
And they're not just buying like standard servers, right? They're targeting the high-end compute market. The sources really highlighted their expansion. What was it, 23,000 AI GPU units?
That's the number, 23,000. And what's really fascinating here is the quality of those units. When you see mentions of high-end NVIDIA B300s, B200s, and the AMD MI350Xs, you need to understand these aren't consumer GPUs.
Right.
These are the specialized next-gen accelerators you need for training and deploying large language models. It's the most expensive, highest demand type of computation out there right now.
So securing that kind of supply puts them in a pretty exclusive club.
Definitely. And that high-end hardware, it translates directly into really robust profitability because of how they operate. Their gross margins are running at nearly 68.3% and net profit margin over 17%.
Okay, and that ties into the vertical integration you mentioned in the notes.
Exactly. For the listener, what this means is IREN isn't just renting out space. They often own and operate the power generation, the cooling infrastructure.
The whole stack.
Right, as well as the server hardware itself. By controlling every layer, they maximize efficiency, they minimize reliance on, external higher cost providers. And that results in those massive margins, even in a high capex industry like this.
Which explains why the street is getting so aggressive. Roth Capital, for example. They didn't just nudge their target, they vaulted it from $35 up to $82.
They did. And that $82 projection, it's based on a very specific, ambitious milestone, hitting a $500 million annualized revenue run rate from their AI cloud segment alone.
By Q1 2026.
By Q1 2026. If they hit that, they fully transition, from being sort of an ancillary data center operator to a major AI utility provider.
Okay, let's unpack the financial strategy behind this kind of explosive growth.
Yeah.
Because executing a pivot this aggressive, getting 23,000 specialized GPUs that takes massive capital, they recently pulled off a pretty remarkable capital raise.
Indeed. The successful closure of that $1.0 billion convertible senior notes offering on October 14th, that was a real game changer. And what stands out to us is, well, twofold. First, it was oversubscribed. Investors were actually eager to put money in. And second, that 0.00% coupon rate.
Yeah, 0% coupon rate. That's essentially unheard of for a company transforming this fast. So they got roughly $979 million net, interest-free. But what does that market trust really signal?
Well, it doesn't mean the money is, quote, free. It means the market is just profoundly confident in IREN's future stock appreciation. So confident that investors were willing to skip fixed interest payments. They're betting the stock price will rise so much that the conversion feature turning debt into stock later will be their payout.
Right.
It's pretty much the ultimate endorsement of the AI growth story.
That makes perfect sense. But raising that much convertible debt, doesn't that usually carry a heavy risk of shareholder dilution down the line? How do they manage that without, tanking the stock price?
They executed a very sophisticated maneuver, capped call transactions. For the listener, think of it like IREN buying an insurance policy on their own stock price. This transaction, it's structured to basically mitigate the dilution risk up to a cap price of $120.18 per share.
$120, okay.
So yeah, they get nearly $1 billion in cheap capital now, but current shareholders are protected from that conversion dilution unless the stock performs incredibly well, soaring above that $120 mark.
So it shows management is thinking strategically about both growth and shareholder protection.
Exactly. It reframes the capital raise. It's not just a quick cash grab. It's strategically quite brilliant.
Okay. Now, while the AI engine is clearly roaring, we can't completely forget the company's original business. They also hit that operational goal, right? 50 exahash self-mining capacity.
Yeah, that milestone confirms their operational strength in the legacy business. While mining profitability, it fluctuates. Having 50 exahash capacity makes them a top-tier global player in that space. It provides a foundational cash flow stream that kind of insulates them slightly from the initial heavy capex for the AI cloud business. It's like the stable base supporting this hypergrowth tower.
Right, a bit of ballast. So if we connect this to the bigger picture, the next few months look loaded with specific high-impact events. This whole high-growth story is about to face some real market scrutiny.
Yes. All eyes are laser-focused on the Q1 FY26 earnings release that's scheduled for November 6, 2025. This will be the first major data point since the big capital raise, and the market needs proofs that the AI revenues are accelerating like they're supposed to.
So investors will be watching what? The raw cloud revenue numbers?
Two things mainly. The raw cloud services revenue, absolutely, and any update on management's official annualized run rate projections. That'd be key.
Okay, and here's where it gets, well, highly dynamic. Beyond just the earnings, you have these systematic institutional flows that are likely to amplify whatever happens with the price. We've got the ETF rebalancing event on November 24th, and then the reporting of noteworthy institutional buys, basically finding out what the big funds bought on January 10th.
Exactly. And given IREN's visibility now and its high correlation to both crypto and the exploding AI sector, these flow events could easily trigger significant price volatility, which brings us neatly to the stock's inherent nature, that high beta, 4.2.
Oof, a beta of 4.2. That means this stock is, what, 4 times more volatile than the overall market?
Pretty much. So while that high growth supports its resilience during bull runs, any market hesitation, any risk-off sentiment, or bad macro news, you're likely going to see the stock dramatically overreact to the downside.
So the high potential reward is definitely matched by extreme price risk.
Absolutely. And that risk environment, it's currently being fueled by some intense speculative chatter. The sources you sent point to 3 major rumors creating serious buzz right now. Any one of these could act as an immediate volatility trigger.
Okay, let's hear them. The rumor with probably the biggest potential upside is this possibility of an AI mega deal announcement.
Yeah, the chatter suggests a partnership with a global technology leader, basically locking in exclusive deployment of their massive AI infrastructure.
So if they announce a long-term anchor tenant for a big chunk of that 23,000 GPU capacity.
It validates the entire thesis instantly. Huge potential catalyst.
Okay, what's next?
Then you have the industry talk about a possible strategic buyout. Maybe a larger cloud provider or perhaps a major data center operator might want to acquire their hybrid AI and mining assets. It would give them an immediate foothold in the high-end GPU space. That vertical integration we talked about makes them a very desirable target.
Interesting. And the third one?
And finally, there's some anticipation among insiders, apparently, of a further convertible issuance.
Really? After just raising $1 billion?
Well, the speed of expansion in the AI sector is just ferocious. If equity valuations stay high, they might choose to accelerate their capacity build-out even further by tapping the debt market again. It's a possibility people are watching.
Okay, so we've got the strategic shift, the capital injection, and these potent near-term catalysts and rumors. Let's try and ground this a bit by looking at the technical picture. Is the momentum actually supporting the fundamentals here?
Technically, yeah, the picture remains unequivocally bullish right now. The stock's painting that classic pattern of higher highs and higher lows that confirms strong market accumulation. And crucially, the price is holding firmly above both the 50-day and the 200-day moving averages. That's textbook confirmation of a sustained uptrend.
Okay, what about specific price levels? What are traders watching in the short term?
Well, we see firm support established down around the $47 to $50 range. Seems to be a solid floor for now. On the upside, the near-term resistance and kind of the major breakout zone lies between $63 and $74. Given the current momentum and these upcoming catalysts, our sources are projecting a short-term trading range, maybe $56 to $74. The technicals are definitely backing the bullish story.
And overall, the broader street confidence seems to align with this.
Oh, yeah. The consensus rating is a solid buy. You've got a robust median 12-month price target of $75, and there's even an aggressive high target pushing towards $100. That's a strong signal of conviction in this long-term structural shift they've made.
Where there is this fascinating contradiction we have to address. It really requires some critical thinking. We saw H.C. Wainwright recently downgraded IREN to a sell rating. But paradoxically, they also raised their price target by 25% to $45. That almost never happens. What's going on there?
Right. It raises a really important question. What do we make of an analyst basically saying, the company is worth more now, but you should sell it? It signals, I think, that they have fundamental confidence in the increased valuation of the underlying assets.
Right.
The AI infrastructure, the margins, the capital they raised, but they have serious concerns about the pace of the stock's recent run-up.
So they believe the market has gotten ahead of itself. They're acknowledging the company's value ceiling has been raised dramatically because of the AI pivot, but they think the current stock price has maybe temporarily overshot that new ceiling?
That's how I read it. It's a valuation warning, fundamentally not a rejection of the company's strategic move itself.
Got it.
Precisely. And it's, a necessary dose of skepticism that helps balance the otherwise overwhelming bullish sentiment. When a stock has a beta of 4.2 and has just executed a $1 billion raise, the risk of short-term overheating is very real. But if we synthesize all the information, the explosive growth, the strategic capital raise, those high margins, and the significant institutional confidence, the long-term investment thesis, well, it remains overwhelmingly bullish.
So the overall consensus, despite that one kind of isolated warning on valuation, it still settles on what, a 9 out of 10 bullish outlook?
That's about right. IREN successfully positioned itself to capitalize on the huge structural growth of AI infrastructure. That makes it attractive for both short-term traders looking for that volatility and for long-term investors buying into the future of the GPU as a utility.
Okay, so maybe the final thought here. The question for investors isn't just if IREN will flawlessly execute its ambitious AI expansion plan, but maybe it's whether you, the investor, actually have the emotional and financial stomach, really, to manage a stock with a beta of 4.2 as it navigates what could be a potentially tumultuous earnings season.